Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on the market rundown. So FOMC day today was a dud. It didn't do anything, and it was the least amount of a reaction that I can remember in pretty much 2 years at this point. So that was because the market had it all priced in. It was no odds of a rate hike, and we did not get a rate hike, and forward-looking language didn't really throw anything off. So this tells us that the market did a really good job of pricing everything in. So where we are at this point is that coming after the bull breakout, this is very normal, healthy consolidation still. This is still a potential bull flag pattern. The bulls bought the dip today, and we're looking for a new all-time high in the S&P 500. And the question is going to be, we had a little bit of a weak reaction to Tesla and Facebook earnings today after hours. So we're going to be watching. There is this gap here at 237.41. There's another gap at 235.31. And we're watching to see if the bulls can continue to consolidate like this. There's absolutely nothing bearish about this chart. We're pretty much just patiently waiting. And the psychology of the cup and handle pattern is there on SPX, which is the S&P 500 cash level. I say the psychology of the pattern because if you were putting this in a textbook, it would be too ugly in terms of these ups and downs, and there would be plenty of people that would say this is not a cup and handle pattern, and I wouldn't argue with them. I would just say the psychology of the pattern is the left side of the cup is resistance. You pull back, you find support, you head back up. You are unable to break the left side of the cup on the right side of the cup. Here we pulled back by $4, and then you consolidate in a normal, healthy manner, and then you break out to higher highs. So this is the psychology of a cup and handle pattern currently playing out. And if we were to see an increase in bear volume and a move down towards filling these gaps, that would negate that. But as of right now, that's not happening. So on the weekly time frame, indecision doji with 2 trading days left to go. We'll have to see how the next 2 days go. But again, there's very little sign of the bears right now. And we have this scenario where it's been playing out pretty much all of 2017, where if the tech sector pulls back, the financial sector picks up the slack and vice versa. And we see that over this past week. It's happened time and time again where they're almost just tag teaming and taking turns on when one is strong and when one is weak. IWM on the daily time frame, much weaker. We saw that weakness pretty much last week on Friday. We saw IWM stand out as one of the weaker names. We had an increase in bear volume, a big bear candlestick, and a close at the low, and it's done nothing but follow through with that weakness. Unable to confirm the bullish candlestick of Monday, follow through to the downside. So there's a gap here at 137.55. We have not filled that yet. Bulls did buy the lower dip today and have a lower wick down there. So this is a bullish reversal candlestick that needs confirmation tomorrow. We did not confirm the last one. Need to see the bulls show up with a nice green day tomorrow. Weekly time frame, bearish reversal doji rejecting from the upper Bollinger Band. We're rejecting from that upper Bollinger Band again and confirming that bearish reversal doji. So there's a gap here on the weekly at 137.67, and we have not filled that by 1 penny. Middle Bollinger Band support, 136.49. Normal healthy consolidation. The Bollinger Bands are very tight. They're going to begin ascending and creating room and space to the upside. Bulls just have to be patient if they can't break out and close above them. QQQ is consolidating, and here's another potential bull flag. Big bull breakout, bearish reversal, hanging man, or not a hanging man, a dragonfly doji. A pullback confirming the bearish reversal candlestick, but the bulls bought the dip. There's a nice long lower wick on that candlestick. That being said, Facebook had a bearish reaction. We're seeing the tech sector down a bit after hours, so we could potentially continue to consolidate. And we'll see if we could see another red day tomorrow and still be forming a bull flag on this daily time frame. There's gaps here to be watching as well. 136.34. Another one here at 135.75. So there is a lot of wiggle room because of the strength to the upside. Bulls could pull back very significantly and still be just fine on the daily time frame. The weekly time frame is potentially forming a bearish reversal candlestick, a little bit of an upper wick forming, and watching to see if we see a bearish reversal gravestone doji or an inverted hammer. But as of right now, still a very strong weekly chart as well. So, watching SPY close, we'll see if we continue to stay in this pattern. We'll continue to check in day after day. I appreciate you watching. Likes and shares are always appreciated. I know we put these out every day, and it can sort of get to be the norm to watch them, and likes and shares and interaction goes down. And we certainly appreciate any likes and shares, so by all means, click some buttons. Thanks again. We'll see you tomorrow.